Let's take our look at our 60-minute chart of the S&P 500, and you can see in here what happened during the week. The gray area, the overnight, and the white area is the trading during the regular trading session. You could see in here that we got a big up day here on Monday. The NASDAQ led the way up some 96 points, Apple up 350 as Buffett came out and talked up Apple, increased his investment over there. Come Tuesday, Powell, well, he was hawkish, and the market saw that as a surprise, raising the likelihood of getting 4 increases this year in the Fed fund rate. Market got hit very hard in there. Wednesday overnight, China PMI came out a lot weaker, and the market got hit for a moment there, and then there was a couple of big waves of selling that you can see right in here, and we got this big decline here as tightening worries really hit the market late in the day, and we ended up with the worst down month and the worst February since 2016, and that is just the beginning. On Thursday, Powell Day 2 comes, and his comments seem to, calm the market right in here. Powell said no evidence of wage or economic overheating, and we got the big pop that came right there, and it came right back down. You could see that. And then over here, we got the confirmation that Donald Trump confirmed tariffs on steel 25%, aluminum 10%, and that trade war fear started to come in. Dow plunges something like 500 points or worse on Thursday. That was bad. And then overnight on Friday, there was selling worldwide. We've gotten a rebound off of here as we've hit some short-term resistances, short-term supports, but that rebound in there is, in my opinion, something to be pretty skeptical about. This is a week that we saw some major selling coming in, and this has to be extremely disappointing for the bulls when you see this kind of rejection after that move. So on February 6th, I did a big picture view of the stock market. We do big picture analysis on all the major markets, occasionally, maybe once every month or two. And we did the stock market then, and we talked about the risks going up. That was just a few weeks ago. And that the technical analysis or our cycle analysis shows danger. Now, with all this bad news in the background that we're seeing, it aligns perfectly. That's that perfect storm, getting in alignment with the technicals, and we think that the risk favors the downside in a very significant way, and that is very likely to continue. You're going to want to see that video because it's highly technical. It really illustrates cycle analysis the way I do it on a big picture, looking back historically at markets all the way back for about 60 years, showing you situations that were very similar to what we have right now. And I've now moved that video into our level 1 membership. In other words, it's free. All you have to do is become a level 1 member at AskSlim.com, and then you just click into my dashboard and you will see that as a free video. We've got half a dozen good videos in there that are free that you'll be able to enjoy. So become a level 1 member, and then you'll be able to see our big picture analysis on the stock market. Take a look at what happened in this rally. So the rally lasted 10 days, rallied some 250 points in the S&P 500, got over the 61.8% that we had right over here, and gets up over here to very close to the 78.6%. Engulfs that day, gives you that signal, and then moves down into this minor support zone and then bounces. We're looking at these cyclical patterns in here, and you look at the cycles on the bottom, it might seem confusing. The reason is because there's a minor cycle in here that shifted halfway over, and that essentially made this 3 cycles long versus 2 cycles long, which is what we've had. It's a rare situation, It was somewhat obvious to me when it happened, and then you can see it's falling back in line, and now following that light purple pattern that you could see right in here, where it then falls over and declines. So you have this declining period here is what we're in at this point. The downside of this, which we think will be 3 or 4 days in the downside more, comes down to about 26.30. If it's worse than that, it's a very much worse scenario. We think it'll do that by Wednesday or Thursday and then turn up again, and that the next advance will be less than this big bounce that we had because investors are scared now, and then we will then get another wave to the downside as this correction continues. So we're going to call this week get down to 26.30 in the S&P 500 and then get a rebound in there. We'll look at the momentum in here, and you could see it's just turning negative again. You're not establishing any kind of momentum in here that's holding at the moment. To do that, you need to get the slim ribbons widening, and you can't do that. You see they narrowed in here, and they're still very narrow, so you're not getting that. Way back over here where they began to widen, you can see it drove the market up on that strong momentum. Now it started to widen in here and then just got narrow again. So it's hard to establish any momentum at the moment as the bulls and bears are fighting the war at this time. So 26.30 on the downside is what we're looking for, and then a bounce in here, and we'll just look for that kind of a market that continues in this zigzag that favors the downside. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to AskSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.